Good afternoon. Welcome to the 2023 Upper Manhattan Mid-Year Real Estate Report by Harlem Lofts. It's July 18th. We're going to divide this report, as we always do, into two segments. The townhouse market analysis first, and then the condominium analysis. And we're going to do a 5-year look back. I'm Robb, the founder of Harlem Lofts.
And I'm Gareth John, the head of research.
All right. And we have S.R.O behind the scenes as licensed agent. Okay, the townhouse market analysis. This is the zip codes that we cover, Upper Manhattan only. This is the property types that we cover.
Okay, so let's jump straight in. We're going to look at townhouse sales, townhouse listings and in contract. Then we're going to look at condo sales, listings and in contract. Townhouse sales, compared to year on year, 2021 to 22 to 23, we saw 69 transactions versus 113 in the previous year. $147.2 million versus 252. So, I mean, the market cooled due to increased interest rates. To put it into context, 2018 to 19 and 19 to 20, 79 to 83 sales. So, you know, things are down below normal, but they're not really significantly below normal. Things were significantly or even more impacted in 2020 to 21 during COVID, 64 sales. Normal market 2018, 2019, dropped in 2020, rebounded in 2021, back down in 2022, 23 due to increased interest rates. Okay. Let's look at that in more detail. We've got 2021 to 2020 to 2021, decreased sales due to COVID, and then rebound the following year, and then back down in the most recent year. However, we are seeing slowly a recovery. Only in the past quarter, early signs of recovery. It may be a false dawn, but it looks to me as a research analyst as though it's probably real.
If you want these charts, they're in the link below.
Okay, prices haven't changed, as you can see. That suggests that the underlying market is, healthy. This is from in the past 5 years. It's pretty much flat. Okay. And then let's look at property transactions by class. We've got 1 and 2 family residential, 3+ family rental investment properties, S.R.Os, their own kind of investment, kind of renovation investment properties. If we look at residential, you can see that the number of sales has dropped. So we're going on percentage of sales. Percentage of sales, residential, the blue bars, hasn't really changed. The rental investments has decreased. As you can see, it's fairly significant. S.R.Os are fairly stable. So what's been affected by the market in terms of market share has been the rental investment rental investment properties. Okay. We should say that if we look into sales in more detail, S.R.O prices have decreased, but the sales numbers have remained stable. Okay. So these have looked at market history. Let's look at the market where we are now. Okay, so townhouse inventory was stable through 2021, overshot to 117 in late 2022. Interest rates went up, supply went up, and demand plummeted. We've got a similar pattern this year, not quite as exaggerated. Sales are slowly rising. Last year, 2022, sellers were maintaining high prices, I guess advised by their agents. Buyers were looking at double the cost of borrowing. Sellers have now realized that that's the case, and prices are coming down, and buyers are starting to buy once again. So it is still a buyer's market, but sellers and buyers are closer than last year.
And if you guys want to look at the monthly reports that we have on our YouTube channel, you'll see this month by month, and there's a little more detail on that.
Yeah, absolutely. Okay, let's look at inventory. So inventory went up to 117 late summer 2022. Dropped in the winter, not because of increased sales, but because everybody pulled their houses off the market.
They were on the monthly. There were 30 and 40 being pulled off a month.
Yeah.
So
yeah, people realized that the market was dead, and they had to kind of reset and rethink.
right.
It's come up again, but discounts are also coming up now. So sellers have rethought the market. Inventories come up, prices are lower, and in contract, on the right here, this is listings, discounts in contract. In contract, it's slowly starting to recover. Okay. So, what's driving the recovery? What's the market doing? What's selling? If we look at townhouse listings, in contract, and sales, so these are snapshots right now, and this is the past year. You can see that, and they're subdivided by price. Less than 2 million, 2 to 3, 3 to 4, over 4. Of the 113 listings on the market, 69% are priced below 3 million. Of the 10 in contract listings, 80% are priced below 3. And of the sales, 69 sales in the past year, 87% were priced under 3. So the lower end of the market is dominating. Very few townhouses over 3 million are going into contract and being sold. Okay.
So Gareth, what is the reason you think the market is showing signs of rebounding?
Okay, I think there are a couple of factors, Rob. The first is sellers are realizing that buyers are having to pay more for their money, and as such they are reducing prices. And honestly, there's just a year's worth of pent-up supply and demand. I think people have put off selling and buying as long as they can, and now they've just got to sell and buy. I mean,
similar to COVID, it's pent up. People have to move, people have to live.
Right.
So I think they're getting used to the interest rates. The interest rates are now hopefully tapering off, and what we're hoping for is a 2024 rebound similar to 2021.
Oh, that would be great.
Because the signs are the same as 2020, right?
Yeah.
All right.
Yeah,
so the interest rates are high. My feeling is, telling my age, I'm Jimmy Carter days. My first house was 12%. I refinanced at 9%, and I was happy. In the last 30 years, people haven't seen that. But I think people are going to get used to these interest rates, and things are going to start moving. But the prices will be obviously down from what they are right now.
I agree, and I think that the sellers and buyers are kind of getting onto the same page. It's taken time.
So this is a defining market. We're in the definition, the period in which it gets defined. Okay, well that's good to know. We look forward to. Let's talk about condos.
Yep. Let's go.
Okay, so let's talk about the condominium market. If you remember, he'll give you the details. Gareth will. If you remember, the condo market was on fire because we had a lot of sellouts for pin-up demand and pin-up release dates from during COVID. So 2021 was crazy, and even into 2022, and the interest rates didn't affect it as much because of the launch of the new properties. Now, those new properties, now we're having the same effect where developers are delaying some of the launches now because of the interest rates, and they want to wait until maybe fall, but maybe spring of 2024 to launch. So I think you're going to see a repeat of 2021.
Right.
Give us the details.
So we were talking about a defining market for the townhouses. Right now in the condo market, we're looking for the defining market, and we don't have it yet. Or, I mean, I don't have it yet. Anyway, right. So inventory, condo inventory, listings recovered post-COVID, but overshot. That was part of a concerted and sustained condo sellout in 2021 through 2022. It remained high, dropped a little bit. It's a little higher now. It's currently 346 as of the most recent numbers. As you'll see, the market in 2021 to 2022 was on fire, but it's significantly cooled since then, and we're kind of looking at what's going to come next. So 2021-22, 556 sales, 273 in the past year. So that's a drop of about 50%. Yeah. To put it into context, 274 and 245 was a more kind of normal market. So the market the past year has been reasonably average, given the whole 12 months, and it's 2021 to 22 that was the really kind of hot.
Well, this puts it into context that this
right.
was the sellout of all the pinup properties
right.
that released late due to COVID.
Right.
So we're back to average now.
Yeah, we are. But it's, as you can see, okay, so let's see, 2021, 22, rebound, and now the market's cooled. It's especially cooled in the past 2 quarters. It looks as though interest rates have, as Rob said, have impacted both supply and demand. Developers are waiting until the market starts to show appetite before launching. So we're looking 2024. We anticipate a stronger market. It's hard to tell. Okay, prices went up during 2021 to 2022 slightly, but the market's not changed a whole lot, suggesting that the underlying health of the market. Okay, and then in terms of sales, condo class, R1 is 2 to 10 units, R2 walk-ups, R4 are the new elevator buildings, and they are really 80% of the market plus. So condo sales in Upper Manhattan are driven by new, large elevator developments.
All right, so Gareth, what you're telling us is that it sounds like the big condos that are developed, that were held up with COVID, launched, people were paying normal prices, a little higher even, recently, last quarter or December, right?
I think through the quarter 3 2022, I mean that wave broke, and now we're looking to see where the next wave's going to come.
Okay, and what we've noticed, people want to know what's happening in the future, so we'll tell you that these developers that have held off, they're going to be releasing them spring of 2024, we think, and then you'll see another rebound of the condo market, and we'll have to see where prices come in.
And we've been looking at, approximately 20 to 30 new developments.
That's right.
And if our viewers would like to know what they are and how much they are and where they are, they can just ask.
These are the properties that are filed with the Attorney General that we'll be releasing, and we know estimated dates. And then, again, strategically, these developers release them when the market is best. There's a little bit of playtime there, but we know of all 33 that are coming up.
We do.
All right. Well, thank you for watching. Again, links to the charts are below. Watch us on YouTube. We do monthly reports that are a lot shorter than this one that updates you. And our website has a bunch of resources too, harlemlofts.com.
Thank you very much.
All right, bye-bye.